The ongoing trade war between the world's two largest economies, the ultimate smackdown, Godzilla versus King Kong. The big dick swinging competition is in full display. While the United States appears to have the upper hand, we cannot overlook the fact that China remains a formidable global economic powerhouse, particularly in manufacturing, and they're determined to fight to the end. They don't want to lose face. Who will emerge victorious? And more importantly, how can we safeguard our assets if these giants decide to escalate their conflict, which, to be fair, does seem to be de-escalating currently. But if they do escalate, if there's loss of face, or some kind of perceived slight, either side can tweet out some bullshit and pull the global economy down with it. So stick around as we look for answers. Trump's tariffs, the wild card of markets this year, have subjected the global equity markets, gold markets, bond markets, crypto markets, everything to wild volatility. Trillions of dollars wiped out in a single week. Just one positive tweet and news, and we're so back immediately. Everything pumps. One more negative tweet, everything dumps back down again. These wild swings are not for the faint of heart, nor for those who cannot manage risks. And to see the kind of swings we've seen in the stock markets, that's rare. Our timeline starts back in February when President Trump announced a 25% tariff on Canada and Mexico and 10% tariff on China. Markets didn't like that. China didn't want to back down. They imposed counter tariffs of 10 to 15% on energy-related products, agricultural pieces of machinery, large displacement cars, and pickups. Since then, it's been a game of one-upsmanship, chess, whatever you want to call it. Get the measuring tapes out. Who's got the bigger schlong here? Trump keeps upping the ante whenever China counters. China counters every time Trump ups the ante. The tit for tat got so bad that China retaliated up to 125% on U.S. imports, while Trump, who didn't want to get outdone, slapped Chinese imports with up to 250% tariffs, or was it 145%? Who the hell even knows anymore? The numbers are all confused. They're out of control. Everything gets thrown out, retracted, thrown out again, retracted. It's ridiculous. But the number one thing here is that the tariff numbers are crazy high and tensions are very high between the two biggest economies in the world. The parries and counterpunches did not stop with jacking up the import taxes. China, for one, began banning certain things like rare earth mineral exports. The Asian country also returned a couple of Boeing planes worth over $1 billion, saying we don't want to buy any more of that shit. Boeing is just one of many companies that are caught in the crossfire. Literally tens of thousands probably of small companies are going to get screwed by all this stuff going on. Right now, word on the street is that there might be some softening from the U.S. side. China may not be biting, or are they biting? It's all kind of cloak and dagger in the shadows right now. And I don't blame China for not wanting to bite. Trump's moves are unpredictable. So you really never know if that olive branch he's extending is just another trap he's luring you into, and they'll tweet something out tomorrow that undoes everything he just tried to build. Now, hey, before we get into the next part and really sort of try to dive in on who has the upper hand here, a big shout out to today's sponsor, who is I Trust Capital. Guys, if you are investing in crypto for the long term, guess what? Taxes are going to screw you. And I'm guessing that you don't want to be screwed by taxes, do you? No. So you might want to look into what iTrust has to offer for you. If you're a long-term investor, they've got a great package for you because you can wrap your crypto trading and your crypto investing in a retirement account. Now you can start a new retirement account, bring over your existing 401k or whatever retirement account you may have. Do all the crypto trading you want, 1,000 trades, 0 taxable events. That's insane for the long-term potential for what you can build in your portfolio. Seriously. They got all the big coins, Bitcoin, Solana, Ethereum, Dogecoin, okay? Plus, they have a partnership with Kitco, allowing you to diversify into real gold and silver as well. A nice bit of extra diversification for your portfolio. You can do in-kind withdrawals, putting those actual coins in your pockets too. So lots to love at what iTrust is doing. If you want to learn more about their services, there's a link down below. Using that link, you'll also get a $100 bonus just for starting your account. Go check it out. Link down below. Thank you for supporting the channel's sponsors. So let's get into this. Who has the upper hand in the tit-for-tat trade war here? Well, obviously it depends on who you ask and when you ask them and what you ask them about specifically. Those who are betting on China have some pretty compelling reasons. First, this is not the first U.S.-China trade war. In 2018, Trump did a similar dance with China. They slapped the Chinese solar panels and washing machines. I know you're thinking, damn, not the washing machines. Yeah, they got the washing machines too, guys. 30% tariff. Since then, China has sped up the preparation for a future beyond the US-led world. China has been weaning itself from its biggest customer and has since expanded trade with Southeast Asia, Latin America, and Africa through its Belt and Road program. Trade with America is about 8% of Chinese trade, which is a very, very big number, but not as big as it used to be. Now, a money control analysis shows that China had already started moving away from the U.S. as its major export market, starting from Trump's first term. They saw the writing was on the wall and how unpredictable the U.S. partnership could be. Chinese exports to the U.S. fell to 14.8% in 2023. It was the lowest in 15 years. And like I said, we're down to, some say, 8% in 2025. Well, the ASEAN economies in the EU are getting a lot more imports from China. Not that China is producing less, they're just selling it in different places. Mexico, India, Latin America, they've all increased Chinese imports. China has another ace up their sleeve too. China holds $700 billion of U.S. treasuries, or government debt, as you'd like to call it. Now, Trump wasn't very bothered when stocks plummeted after announcing his sweeping Liberation Day tariff program bullshit in early April, and even compared the levies to medicine. Well, the market didn't like that medicine and started throwing up all over the place. He then paused the tariffs for 90 days after a sharp sell-off in government bonds. That initial pause, by the way, was not including China, but just everybody else, the EU, India, stuff like that. But right now, he's even hinted at a major de-escalation, saying tariffs on Chinese imports can go down substantially, but not totally to zero. You can't completely lose face after throwing a grenade in the global economy and having to retrace everything. The art of the deal, baby, the art of the deal. So experts are now saying that the bond market has made Trump blink. He's one who has had to swerve in this game of global chicken. The Chinese media are floating the idea that China can simply sell or withhold buying U.S. treasuries, which could make the market value of the bonds fall, thus increasing the interest, which means the U.S. has to pay more to service its debt. The tech and defense industry also highly dependent on rare earth minerals, which eventually the U.S. will build the capacity to refine rare earth minerals domestically, but that doesn't happen overnight. Metal smelters take some time to build, right? You don't build them in a week, you build them over years. China, with its estimated 44 million metric tons of rare earth reserves and 85% of global manufacturing capacity, holds all the cards when it comes to rare earth minerals, the most critical minerals on the planet right now. According to estimates, the International Energy Agency, the country also accounts for 61% of rare earth production, 92% of refining. Crazy stuff. China's restriction on exports will hit a lot of tech companies, including those engaged in the production of electric vehicles and really anything to do with AI chips. Think about robotics. Think about phones, think about anything. Trump's tariff war aims to bring production back to the United States, but that's not something that's overdone overnight. That's going to take literal years to build factories and production and supply chains and all this stuff. China has long been the world's factory, with decades of investment in homegrown technology spanning renewables, semiconductors, artificial intelligence, and way, way beyond that. China is determined not only to catch up with the USA, but to surpass it. And by most metrics, China is still on course to surpass the USA and become the world's #1 economy, potentially within the next decade. Now, even if companies attempt to relocate manufacturing from China, replicating its infrastructure will be a significant challenge. Well, not impossible. Rebuilding what took decades to establish will require time. And a lot of stuff is not going to be competitive when built in the United States. There's also that to consider. Big tech, yes, but America's not going to start making t-shirts, are they? Ew. Moreover, China has the ability to play the long game, unlike the United States, where policies shift with these administrations, sometimes dramatically so, as we're seeing right now. China's one-party system ensures a very consistent agenda, and that is one that does seek to diminish U.S. influence and put China at the forefront of the global everything. Now, whether it takes 10 years or 20 years, China's patient. They can eat shit on a trade deal for a while because they have the ability to absorb that pain. They're prepared to wait. China's got a history spanning 5,000 years. A few decades is but the blink of an eye. On the flip side, for all its faults, the U.S. is still the biggest, badass silverback on the other side of the Pacific. Don't bet against America. Okay, that's one lesson that we've learned over the last 100 years. Don't bet against America. Beijing could be as aggressive at once with its counter tariffs and blacklisting U.S. exporters and all that other stuff. But the question is, how much potential self-inflicted economic harm will they tolerate? They can tolerate a lot, but do they really want to tolerate a lot? Wouldn't it just be better for everybody not to have to eat shit for years? Foreign investment is crucial for China's job creation. It's been on decline since the pandemic. Aggressive moves can alienate investors and probably already is doing that. They can say that they don't need the U.S., but the U.S. still has the biggest economy and the biggest consumer base, with almost $28 trillion of GDP and about 1/3 of global consumption. Everybody wants access to U.S. markets, including China. Now, that $28 trillion GDP, it's bigger than China, Germany, and Japan combined, even though, on a decline, the U.S. is still the recipient of 14.8% of exports in 2023. And again, some experts estimate it's as low as 8% now in 2025. But even a modest reduction in access to this market could create significant ripple effects through the Chinese economy. There's already reports of Chinese factories shutting down, Chinese ships basically dumping their stock instead of going to the U.S. and having to pay the tariffs because they just won't make any money off. They'll lose money. China dominates rare earth productions. U.S. companies typically buy these materials as components from third-party suppliers. If China restricts access, which they have done, or might be walking back at the moment. There's some talk that there won't be some of these bans or that some of the tariffs will be moved on certain things like semiconductors. It's so critical to the global economy. But it's going to basically spur the United States and others to ramp up their own processing abilities, makes chips and all that kind of stuff. The United States can get rare earths from Australia, a longtime ally. They've found big supplies in Texas as well. They just need to build refining capacity. If Australia is convinced to stop supplying rare earths to China and divert the supply to the U.S., which would seem a likely thing because, well, the U.S. is one of the biggest allies of Australia. China's strategy of devaluing its currency to counter U.S. tariffs does have its limits too. A significant devaluation would make imports costlier for China and trigger capital flight into Bitcoin. Similarly, selling off U.S. Treasury bonds would hurt China by strengthening the yuan, making its exports pricier, counterproductive to its own goals. We can go on and on and on and on and on, compare what each side can do. There's 100 other nuances to this story. The truth is, the tariff war is a lose-lose situation. Nobody wins. Whoever thinks they win, everybody loses. Definitely the regular people and regular businesses lose. Tariffs will make U.S. purchasing power lesser. A devalued currency does not benefit anybody but a government that's struggling to pay its debts. So instead of focusing on who will win, why not focus on what we can do? We can't change government policy or Trump's tariff bullshit. We can focus on our own game. Now, government agnostic assets like gold and Bitcoin fit the bill pretty nicely. China has been stockpiling gold since it knows it's a hedge against economic turmoil. The United States has the biggest gold reserve on paper, and Trump is hell-bent on making the U.S. the crypto capital of the world. The writing's on the wall, guys. Bitcoin is something to pay attention to right now in this world of economic chaos. Look at how the Bitcoin did when stock markets were melting down. Other countries and big institutions are stockpiling Bitcoin like it's a Black Friday sale. We keep getting new news coming about new corporations, new big players, new institutions. Maybe the news is distracting us from the true story here. Maybe the true story is a new world order or a new economic turmoil is inevitable, and neutral assets like gold and Bitcoin are going to flourish in that environment. The real question is whether we all have enough Bitcoin when the fall eventually arrives. I know I don't, and I've been stacking for years. Shit. Always got to get some more Bitcoin, guys. Thanks for watching. I'll see you in the next one.